Well, ladies and gentlemen, welcome back to Boss Economics World, the only show that takes the economic dumpster fires of the world, douses them in satire, and lights a match just to see how big the explosion gets. I'm your host, the one, the only, economic overlord of chaos, here to break down the madness of markets, the lunacy of leaders, and the sheer absurdity of it all. Buckle up, because today, we're diving headfirst into a golden mess, literally. Gold prices are soaring, Trump's throwing tantrums, and the Fed? Oh, the Fed's independence is hanging by a thread thinner than a Wall Street intern's resume. Let's get into it. Alright, folks, it's August 21st, 2025, and the economic world is buzzing like a beehive poked with a stick. Gold, yes, that shiny metal your grandma hoards in her basement, is trading above $3,342 an ounce, up nearly 1% after none other than President Donald J. Trump decided to play Fed puppeteer again. This time, he's calling for Federal Reserve Governor Lisa Cook to resign over some mortgage fraud allegation. Now, I'm no detective, but when Trump starts meddling with the Fed, you know it's less about justice and more about control. If Cook steps down, Trump gets to appoint a new governor, likely someone who'll say, "Yes, Mr. President, let's print money like it's Monopoly." And that, my friends, is a one-way ticket to dovish town, population, inflation. But wait, there's more. While Trump's busy trying to turn the Fed into his personal piggy bank, gold bugs are popping champagne. Why? Because gold loves chaos. And chaos, my friends, is what we've got in spades. Traders are now laser-focused on Fed Chair Jerome Powell's upcoming speech at the Jackson Hole Symposium, aka the Super Bowl of central banking, hoping for hints about rate cuts. The market's betting on at least a 25 basis point cut next month, and guess what? Gold doesn't pay interest, so when rates drop, gold shines brighter than a TikTok influencer's teeth. But here's the kicker, the Fed's last meeting minutes showed they're more worried about inflation than the labor market. So, are we cutting rates, or are we fighting inflation? Make up your mind, Fed. This is economic whiplash. Now, let's zoom out and look at the shiny elephant in the room. Gold's been on a tear, up over 25% this year alone. That's right, folks, while your tech stocks are busy crashing and your crypto portfolio is a sad meme, gold's out here flexing like it's 1979. And it's not just retail investors panic buying gold bars from late-night infomercials. Oh no, central banks are in on the action, gobbling up gold like it's the last slice of pizza at a frat party. According to the World Gold Council, central banks bought a record 1,136 metric tons of gold in 2024, and 2025 is on track to top that, with emerging markets like China and India leading the charge. Why? Because they're scared of a weakening dollar, geopolitical tensions, and maybe the fact that the US debt to GDP ratio just hit a jaw-dropping 130% in Q2 2025, according to the IMF. Yikes. And it's not just central banks. Exchange-traded funds, ETFs, are seeing inflows like never before. The SPDR Gold Shares ETF, GLD, the world's largest gold-backed ETF, saw inflows of $5.2 billion in the first half of 2025 alone, per Bloomberg data. Analysts at UBS are screaming from the rooftops that gold's got room to run, and Fitch Solutions' BMI unit is predicting prices could hit $3,600 an ounce by year-end. But here's the $1 million, or should I say, $3,342 an ounce question: is this rally sustainable, or are we just watching a shiny bubble inflate faster than a politician's ego? Alright, let's get serious for a hot second, well, as serious as we get here at Boss Economics World. Trump's attack on Lisa Cook isn't just political theater, it's a direct assault on the Federal Reserve's independence. And folks, this isn't the first time. Remember back in 2018 when Trump called the Fed crazy for raising rates? Or in 2024, when he suggested he should have a say in monetary policy decisions? Now, in 2025, he's at it again, trying to strong-arm the Fed into submission. If Cook resigns, Trump gets to appoint a new governor, and you can bet your bottom dollar, pun intended, that it'll be someone who'll push for lower rates, even if inflation's still running hot. According to the Bureau of Labor Statistics, U.S. inflation hit 4.2% year-over-year in July 2025, well above the Fed's 2% target. So, what happens if the Fed caves to political pressure? Spoiler alert, it's not pretty. Here's the deal, folks, an independent central bank is the bedrock of a stable economy. When politicians start meddling, you get what economists call time inconsistency, fancy talk for short-term pandering that screws over the long term. Look at Turkey, where President Erdogan's meddling with the central bank led to inflation hitting 85% in 2022, per the Turkish Statistical Institute. Or Venezuela, where political control of monetary policy turned the bolivar into toilet paper. Now, I'm not saying the US is about to become Venezuela, but if the Fed loses its independence, you can kiss economic stability goodbye. And guess what? Gold loves instability. So, while Trump's tantrums might tank the dollar, they're sending gold to the moon. But wait, there's a deeper layer to this economic onion, and it's gonna make you cry harder than a rom-com breakup scene. The real issue here isn't just Trump, or the Fed, or even gold, it's a crisis of confidence. Think about it, why are central banks hoarding gold? Why are investors piling into ETFs? Why is gold up 25% while the S&P 500 is flatlining, per Yahoo Finance data? Because nobody trusts the system anymore. The US dollar's status as the world's reserve currency is under threat, with the BRICS countries Brazil, Russia, India, China, and South Africa pushing for a gold-backed alternative, according to a 2025 report from the Atlantic Council. Meanwhile, geopolitical tensions are at an all-time high, with the US-China trade war escalating and Russia's ongoing conflict in Ukraine driving energy prices through the roof. Brent crude oil hit $95 a barrel in August 2025, per Reuters, fueling inflation fears and making gold look like the safest bet in town. And let's not forget the elephant in the room, debt. The U.S. national debt just crossed $36 trillion, according to the U.S. Treasury Department, and with interest payments eating up 15% of federal spending, per the Congressional Budget Office, investors are starting to wonder if Uncle Sam can keep paying the bills. If confidence in the dollar collapses, gold becomes the ultimate safe haven. Just look at history. During the 2008 financial crisis, gold prices jumped 25% as the dollar weakened, per World Gold Council data. And in the 1970s, when inflation hit double digits, gold soared 1,300% over the decade. So, is 2025 the start of another gold supercycle? Or are we just in for a bumpy ride before the bubble bursts? So, there you have it, folks, the economic circus of 2025 in all its golden glory. We've got a president trying to turn the Fed into his personal ATM, a central bank caught between a rock and a hard place, and gold prices soaring like a SpaceX rocket. What's the takeaway? Well, if you're an ordinary Joe or Jane watching at home, maybe it's time to raid grandma's gold stash. If you're a finance pro, maybe it's time to hedge your bets before the whole system implodes. And if you're Jerome Powell, well, good luck at Jackson Hole, buddy, you're gonna need it. But hey, at least we can all agree on one thing: in a world of economic chaos, gold's the one asset that never fails to shine, literally. So, until next time, keep your wallets tight, your portfolios diversified, and your sense of humor intact. This is Boss Economics World, signing off, because if the economy's gonna crash, we might as well enjoy the show.